Good morning, Steve Sosnick with today's Interactive Brokers Morning Market Morsel. As we're looking at the markets, today being Thursday, the markets are really moving higher. We've seen them rally sharply this morning. I think a lot of traders may be distracted or otherwise watching some of the hijinks going on in the Senate. I know at least one of the major financial networks has more or less devoted full-time coverage to it. But there's some instructive lessons that I'd like people to take away from the action of the last two sessions. First of all, going into the Fed meeting yesterday, we had our normal, let's call it, it's become more the rule than the exception, sort of open up a few points on the futures when we start the day, continue into a rally. Yesterday, the trading was a little bit muted ahead of the Fed meeting. They removed the word accommodative from their statement, yet somehow the market rallied initially afterwards. One piece of advice that sticks through my head when trading around Fed meetings is the first move is often the wrong one. I don't actually have the statistics in front of me, but just my trader gut says in that half hour between the 2 o'clock statement and the 2:30 press conference, the market usually tends to make a false move. And yesterday, the market was rallying despite the obvious evidence that it probably shouldn't be. Then the press conference came out, Powell gave his statements, the market sold off, and when it got through the unchanged line, the selling really accelerated. This morning, we had some good economic numbers. The futures were up their usual few points. Again, that seems to be the norm, but at least today there was some positive economic numbers to back them up. And then the market since accelerated their advances, basically giving back all that it lost yesterday. From, let's say, 2:30 to 4 o'clock. The lessons to take away of this are, again, first of all, I'd like to take a look and say, all right, is that first move the wrong one? Next Fed meeting, you probably won't be able to use that until the Fed makes its next move, either in 6 weeks or more likely 12. The December meeting is the one more widely believed to be on the table. And also, around meetings of that nature, check your risk tolerance. Do you want to be going whole hog into a big event? I think the reason for the viciousness of yesterday's sell-off was people sort of doubled up on their positions as the market initially looked like it was proving people wrong when it was rallying, but markets usually get this stuff right over time. So basically keep your hedges close when you see something like that. And we'll see how we go in to the end of the quarter. Remember that today being the 27th, tomorrow being the 28th, that's actually the end of the third quarter. You may see all kinds of window dressing and markups as we trade into that period. We'll check in on that more tomorrow. Thanks. Bye.